How's that looking? You can see it well? Cool. Thank you.
Ooh! That might explain it. Thank you very much. That's why you couldn't hear me in the room. So my name's Kate Lamb. I'm the Global Director of Water Security at CDP. And we're about to dive into a session that's very close to my heart. It's called Accelerating Water-Related Transparency and Action for the Financial Sector. Something a little bit different from what you've been listening to so far today, but hopefully just as inspiring. Financial institutions find themselves at, in a sense, the top of the food chain. The way in which they invest incentivizes either good or bad behavior. These organizations are funding companies that put dams at the heads of free-flowing rivers, that allow agricultural companies to pump ever-increasing amounts of depleting groundwater resources, or enable chemical companies to continue to pollute water at a rather large rate. But they can also be the key to changing all of this. By deciding what companies to invest in, these financial institutions have an enormous impact on the global economy and indeed on our chances to deliver a water-secure, climate-resilient future. To achieve that future, all stakeholders must play their part. The finance sector is no exception. CDP, along with the Water Footprint Network, Mercer, and supported by the Dutch Valuing Water Initiative, has kicked off a project to increase the transparency, and water-related transparency in particular, of financed emissions amongst these financial companies. Evidence from the French Central Bank suggests that companies and financial institutions that are subject to climate-related disclosure are 40% less likely to fund fossil fuels. Just think about that power. Therefore, we're excited to think about how we move transparency on water-related issues amongst the finance sector and the implications this will have for our ability to achieve the future that we desperately deserve and need. This is the foundation of a range of emerging initiatives that we're going to talk about today. During the event, we'll explore with leaders in finance and water the impact that these initiatives could catalyze in the wider economy, and how financial institutions should be and are reacting as the global water crisis intensifies with climate breakdown, as underscored by the IPCC's 6th assessment report released just last month. So it gives me great pleasure to open the floor to Henk Oving, who you've heard from a few times today already. Henk is the Dutch Special Envoy for Water.
It's an honor to speak here at this important event in the first ever Water and Climate Pavilion at a COP, here at COP26 in Glasgow. Water is the cornerstone of our civilization. It gives us life, it feeds us, and provides us with energy. It's not surprising to see that the majority of thriving population centers are located on the banks of major river systems, lakes, seas, and oceans. We owe a lot to water, as it has given us our wealth and our health. However, the time of taking water for granted is over, since water also has the ability to take this all away from us. Take, for example, oil spills in Mauritania, a very localized matter. However, one of Mauritius' worst environmental catastrophes. The spill seriously impedes the recovery of the Mauritian economy, which is highly dependent on coastal tourism, already being battered by COVID-19 travel restrictions. What about polluted water from abandoned mines in the Rocky Mountains that seeps into rivers, causing tens of millions in cleanup costs and threatening the health of indigenous populations downstream? Farmers can't farm on dying land and fishermen can't fish in polluted ponds. Wherever there's too little, too much or too dirty water, we see a breakdown in environmental and public health and consequently economic wealth. 90% of the world's climate disasters are water-related. Our climate crisis is a water crisis, and the more our temperature rises, the extremer and more frequent these disasters will be and take place. These changes in the environment pose a threat to human lives and key infrastructure worldwide. Environmental and welfare degradation leads to security issues, and security issues lead to business risks. Water should not be viewed as a product for a company that can be easily discarded. Water should be viewed as an asset for both company and the region it operates in. Companies need funds to grow, and often these funds are provided by the financial sector. And the financial sector has seen an increase in climate action the last years, such as mandatory climate reporting and committing to net zero, which is amazing work, but it doesn't end there. You hold the power to steer companies in the right direction. A lot can be gained by incorporating water requirements and water reporting tools when investing in businesses. Clean water equals a healthy, productive workforce community. Without clean water, there is no monetary profit to be made anywhere. An investment in blue businesses strategies is an investment in green numbers on your balance sheet. I want to thank you, wish you best of success this COP and beyond.
Inspiring words, I'm sure you'll all agree. I'm now going to hand over to Jordan McDonald, who is a Senior Analyst of Financial Services within CDP. She's going to provide you with a bit more information about the project and the work we have underway.
Thank you, Kate. I hope you can all hear me well, and thanks everyone for joining us. I'm going to spend the next 6 minutes going through a presentation before we kick off our panel discussion. So let's start with, why do we need increased action on water by the financial sector? Well, the World Economic Forum estimates that $670 billion in investment is needed each year if we're to meet the water-related SDGs. The private sector must play a key role in addressing this. With $155 trillion in assets, the banking industry alone is more powerful than ever before. If we refer to disclosures to CDP's questionnaire on climate by financial institutions, which revealed that portfolio emissions are on average over 700 times larger than direct emissions, we can get a sense of the scale of their impact on the environment via their financing activities. Financial institutions can offer unique systemic incentives for change by ensuring their lending, investment, and insurance underwriting practices drive water users to use water wisely, to not pollute water, and to promote its reuse. However, CDP disclosures by FIs reveal that awareness of water-related risks and opportunities needs to improve. While 81% of responding FIs assess their portfolio's exposure to climate, this number drops to 63% for water security. In 2020, the potential financial impact of water risks reported by companies to CDP was up to $333 billion, a number that paints a compelling case for FIs to consider water security in their financial decisions. So how do we get there? It's encouraging to see a number of emerging water-related initiatives for the financial sector, as you'll see on this screen. When combined, these initiatives provide financial institutions with the tools to incorporate water security into their business decisions and ultimately value water appropriately. For instance, the data that's disclosed through CDP's Water Security Questionnaire provides financial institutions with decision-useful information about the companies they invest in, lend to, and insure. CDSB recently released a guidance for water-related financial disclosures, helping companies provide consistent, comparable, and reliable information for investors via the mainstream. We'll be hearing from Mardi later in the panel on the recent IFRS developments. Initiatives such as Ceres Valuing Water Task Force provide a mechanism for financial institutions to champion for water. Ceres is partnering with key asset owners and managers, NGOs, and the scientific community to further build the business case for addressing water risk and to launch a collaborative investor engagement initiative to drive large-scale changes in corporate water practices. Tools are also available, such as the WWF water risk filter, enabling FIs to conduct analysis, such as assessing water risks in their portfolios. Developments via the Science-Based Targets Network will eventually provide a framework for companies and FIs to set water-related targets. Finally here, CDP is developing its reporting framework to include water-related disclosures by the financial sector. Disclosure by financial institutions sets the foundation, enabling them to start managing what they measure. As well as setting the foundation for action, disclosure is a key lever in driving change in the real economy. As Kate mentioned, a recent study by Banque de France showed that investors subject to climate reporting reduced their financing of fossil fuels by 40%. This is proof of the powerful impact that transparency and disclosure can have on real-world outcomes. CDP, with the Water Footprint Network, Mercer, and support from the Dutch Valuing Water Initiative, is now engaging with the financial sector and water practitioners to develop the first ever set of water security metrics for financial institutions. CDP facilitates the dialogue between the financial sector and the real economy. How does this work? Well, we get investors to support our mission and we reach out to companies asking them to provide data in a standardized manner. These responses are then sent back to the investors for further engagement and decision making. From next year, over 590 investors with over $110 trillion in assets will request financial institutions to report annually against water-related metrics via CDP's reporting framework. The reporting information will become part of CDP's comprehensive data set, which serves a number of communities, including the finance community to inform fund ratings, for example, as well as the policy community to inform data used by the UN. Increasing transparency and disclosure on water from financial institutions will mean the sector is held to account on the influence it has on water and ultimately drive positive change. Thank you everyone for listening. I will now hand back to Kate to kick off our panel discussion.
Thank you, Jordan. Great job. So I am now going to introduce our panelists. We've got around 20 minutes or so for what I'm sure will be a very, very great discussion. First panel member that I would like to introduce you to, if you've been here all day, you will recognize her. She has now featured in, I think, maybe 4 sessions already, is Kathleen Dominique, who's a lead financing practitioner for water within the OECD. Sitting alongside her, we have Amit Talgeri, the Chief Risk Officer of Axis Bank, based in India. We then have Mardi McBrien. Mardi, please take the stand. Mardi is the Managing Director of the Climate Disclosure Standards Board, the only one, unfortunately, of our panel members here in 3D. But then finally, we have Catherine DeConnick-Lopez, who's the Global Head of ESG at Invesco. Welcome, everybody, to COP26. Very, very pleased to have you joining us today. So I'm going to send my first question to you, Kathleen, if you don't mind. Given what we've heard so far and given the great work that the OECD has underway, the recent reports that you've launched and we've heard about this morning, what actions do you believe financial institutions should be taking so that water is properly valued?
Thanks, Kate, and hi again. Greetings, everyone. Indeed, I think really greater attention to understanding and measuring the financial materiality of water risks is imperative. And as I mentioned in earlier discussions, to date, the evidence for how water risks generate financially material impacts on the financial sector is really, really limited. However, at the same time, we know that those risks are generating significant impacts on economies and communities. Those are well documented and rising. But there is a disconnect there between what we see showing up in the financial system and what we see showing up as physical risks, and that creates what we call a materiality gap. What we are seeing, though, is some financial actors, such as central banks, government departments, rating agencies, and investors starting to recognize and take account of these risks. The TCFD is one framework, but I want to share a couple of other examples. One is, for example, the European Central Bank's recent stock taking of current climate and environmental related risk strategies of banks under its supervision. And that stock taking reveals that banks are far from fully taking into account climate and environmental risks. So that's a call for action. And the ECB has recently developed a supervision guide on climate-related, environmental-related risks. And this specifically includes water-related risks such as water stress, flooding, water pollution, that banks should start integrating into their risk management approaches. A second quick example is from rating agencies such as Moody's. They're starting to consider water as a source of credit risk. They focus on physical risk assessment, which includes the location of assets and corporates, their exposure to water-related risks, sensitivity to those, to the financials, to those risks, and also any mitigation measures taken to try to manage those risks. And in Moody's portfolio, they've identified 50 countries that are highly or very highly exposed to physical climate risks. So this is an issue that is capturing attention of credit rating agencies. That's very important. A last quick example is from the recent US executive order on climate-related financial risks and financial reporting. This is major. This spans a huge range of activities across the whole US government. One element to highlight addresses the integration of climate-related financial risks into government lending programs. And US federal loan and loan guarantee programs have an outstanding face value of $5 trillion. That's a T, trillion with a T, US dollars, so that's not inconsequential. And for some of those programs, such as lending to agriculture or housing or urban development, now the consideration of climate risk is becoming mandatory in some cases, and that will include water-related risks such as flooding. So I'll stop there to give you some examples. This is an emerging area, but I think those are really important developments.
Thank you, Kathleen. It is really encouraging. The numbers that you're sharing are, of course, startling, but I think go a long way to raising the sense of awareness and then urgency on the topic. And on that issue, Amit, I'll come to you. What more can we do to raise the sense of urgency on water security issues, in particular with financial institutions, so that we gain a critical mass of these organizations willing to take action?
Thank you, Kate, and CDP, first of all, for inviting me to this little panel, and it's a privilege to share my thoughts. First of all, indeed, a very interesting question. Valuing water and water security is particularly challenging. Water can have very different values depending on the type, whether it is surface, groundwater, reclaimed or desalinated water. It also, looking at quality, reliability, and proximity for its use. Financial institutions contribute to unsustainable water use through their investment practices and have an enormous impact on the state of water resources through what the activities that they finance. There are three things that really financial institutions can really do. One is formulate investment policies that reflect concern over water sustainability, consider claims that potential borrowers or investees will put on water resources in the context of ecological thresholds, and address inefficient water practices so that we don't end up wasting water. The second element is around enhanced due diligence. In today's context, most countries' ESG due diligence is a critical element of the decision-making process at financial institutions. However, the focus is more on long-term project finance or higher amount thresholds for non-project finance investments. And very limited information or assessment happens on water-related risks, which is readily available. Hence, it's important that we use analytical tools, frameworks, water security metrics that are part of this due diligence process to measure and monitor both financial and non-financial water-related risks. The third element is around increased disclosures. Having incorporated investment policies and enhanced due diligence, it is equally essential that financial institutions make the right disclosures, disclosing this in the right frame, demonstrating water risk mitigation actions publicly through internationally recognized standards will also bring in greater accountability. As lenders to businesses, banks are exposed to water-related risks faced by businesses, and these risks are part of our normal day-to-day risks that we take on, which includes delayed payments, non-payments of dues, and sometimes leading to a loss of reputation. So to summarize, if I really look at three elements that I talked of: formulating investment policies, enhanced due diligence and increased disclosures with specific focus on water risks are essential for financial institutions to meet the challenges around valuing water and water security.
Thank you, Arit. It's very good to hear that Axis Bank sounds like you've woken up to this issue, and I think certainly in the context of India, this is part of your normal day-to-day activities, right? This is not a new challenge that you're faced with in that region, of course. Over to you, Mardi, if I may. How can we ensure that corporate water-related financial information will be properly reported?
Thanks to the other panelists. So I guess the very first thing is we need to make sure that ESG issues and water is treated like any other issue that a company has to report on. I think that's first and foremost. So it has to start at the top. It has to start from the board, and it has to be taken seriously, like financial reporting, like any other risk in the business, from the top at the beginning. We then need to think about qualitative data as well as quantitative data, because not all of the metrics are there for the benchmarking. I think you have to be able to tell a story, explain the water strategy, the policies, the performance of the business around that. You don't have to jump straight in with really detailed metrics. You need to start telling the story, lay out the strategy, and lay out the challenge. You also, I guess, need to give that some contextual information, so the location, the availability, the water use. Tell it as part of your corporate story, and I think that's also a really important point. Set in the context of how your business creates and sustains value in the short, medium, and long term. And then from another corporate perspective, we need to think about sort of the what are we reporting, so beyond the context. So the operations with the highest water risks, the stakeholder engagement. It's important to clarify how it's being integrated into the business strategy and the internal processes that have been used to do that. So risk management, internal controls, all the sort of due diligence, verification, assurance sort of processes you make sure, and you would apply to rigorous financial information and rigorous financial reporting. This is business as usual, guys. We need to use the same business as usual processes that we've been using. And then you need to report it, and you need to include it in your annual report and accounts or main communication to investors, if you want to frame it that way. And it's not a cut and paste section at the front. It's not a 5-page document at the front that says, this is my water report. This is an integrated across your corporate storytelling with numbers in the back half if it's financially material, because let's be honest, it doesn't come for free. And if you're taking this seriously, we need to start seeing the numbers in the back. And we're not seeing that for TCFD yet. We're not even seeing that at the best, but that's where the rubber's really going to hit the road. And earlier, we touched on the IFRS Foundation's, next steps and what they're up to. And, if I was a gambling lady, and I am, tomorrow morning, I know that they're announcing an International Sustainability Standards Board, which will be setting global standards, which will cover water, and it will be built off CDSB's guidance amongst many other frameworks and guidance like many others out there. So this is a real wake-up call, because this is the financial reporting standard setter bringing this into their house and saying, right, we're kicking down the silos and we're going to be, bringing this stuff together, and companies need to take it seriously. So with that, from an action-driven process, I love actually talking about action things when I do as well. So one, we mentioned the CDSB guidance for reporting water in mainstream reports like TCFD. It exists. You can go onto the website, and I have business cards with a QR code on the back. You can scan it. It's here. And I've just dropped my last prop of the day. I love a prop. So this week, CDSB is releasing this absolutely fabulous climate risk game. You can play it for water. Take it, download it. You can download these off the internet, cut them up, and play them with your friends, your family, your colleagues, your board, your finance department, whoever you want. And this will help them understand the issues we're talking about today, how to integrate it in strategy. And if you don't manage it, what's going to happen to your share price? This is the golden game, ladies and gentlemen. It's so much fun. And again, if you grab a business card off me at the end, the scan is on the back, and we'll make the links available to everyone online. This is not hard.
Just in time for Christmas.
Yeah.
So you know where to go for your children's stocking treats. Thank you very much, Mardi. And I think it is, having worked in this space for the last decade, seeing the renaissance underway within the finance sector is incredibly encouraging. It's very encouraging indeed. And on that front, Catherine, over to you. Once we have information reported from companies on water-related issues to capital market participants, such as your own, how do these financial institutions best use that data to leverage action? For example, does it inform your engagements with companies? And what else do you do with the information?
Well, really great questions. And I think, in terms of our application, we have the practical use of a lot of this data that is being reported and the ability to engage companies. So I think the good news is we are absolutely using this data. We are absolutely engaging companies on this topic. And at Invesco, I lead a global ESG team. We have a relatively big research group and engagement group, and we at Invesco have over 2,000 company engagements. Just under half of those are around in the topic of environment. So the context is we are a very engaged investor, and we do have a platform for having these kind of dialogues with companies. And on the research side, I think incredibly important to use this data signal, increasingly coming. I think some of the developments around standardization of reporting, comparability of reporting are really important for investors to make better informed investment decisions. But it doesn't, it hasn't stopped us from looking at this issue already. So we have our internal research platform we call Invesco ESG Intel, and it brings together data points from lots of different sources. And on water specifically, we incorporate 3 different elements. So we incorporate water recycling, operations in water scarce regions. So, percentage of operations in that territory is classified as water scarce is an incredibly important metric for us, as well as water consumption. So those are the 3 kind of specific metrics that we are using in addition to our wider, other metrics, climate, governance, social metrics as well, to inform our overall ESG rating of a company. And we score around 10,000 companies globally. So we do have a really broad range of views. And that's the starting point. That's the data story. And then we bring that to our actual dialogue with companies. And on the water topic, I would highlight a few examples. I mean, probably the most well-known example where the investment industry has been involved has been around the mining industry and the tailings situation across that industry, but also just their consumption and operations in various regions. So we have had a lot of engagement with many mining companies around that topic, and we do get to engage at the highest level of companies. So at the chairman, CEO, chief sustainability officer level. And so we are having some really fruitful conversations to, I think, raise the standard, raise the bar, not just on disclosure, but on actually management of the issue. So I would say as investors, we absolutely recognize the role we have to play. We do consider this a material topic, and it's something we are incorporating into our investment processes.
That's really encouraging to hear, Catherine. Thank you. And as you say, the mining sector, when you look at that sector, it's incredibly clear that they are on the front lines of the global water crisis and will inevitably find themselves in increasingly difficult scenarios with regards to growing and sustaining their business if they don't begin to take this issue seriously. So thank you for your leadership with that sector. I really appreciate it. Kathleen, back to you. Along the same theme, but turning to disclosures from financial institutions themselves rather than reporting from corporations, how important do you believe disclosure on this topic is from that particular sector? What might it unlock?
Well, really it goes to the heart of the issue there, Kate. It's very important. I would say 2 key points here. The first is that ignorance of risk is not the same thing as the absence of risk. So it's important that the financial system does not get caught off guard. I'd also like to say that even if some water-related risks may not be financially material today, we've talked about some sectors in some places where they are probably material right now. But even in other sectors where they may not be financially material today, they are likely to become increasingly material over time as the impacts of climate change intensify and manifest. And hence, we need to think about materiality in a dynamic way, really dynamic materiality. So seeing how these issues are developing over time. If we don't, then it becomes a bit of a black box, and we all know of examples where the financial system was caught unprepared because it didn't properly assess risks, and of course that led to the great financial crisis in 2008. So we can't underestimate the fact that hidden risks can create massive problems. The second point would be that, if and when some water-related risks are considered financially material in the financial system, this could then in turn spur action in terms of the allocation of financial flows, and hopefully encouraging more money going towards investments that contribute to water security by reducing the physical and economic exposure and vulnerability to water-related risks, and also shifting money away from supporting investments that increase exposure and vulnerability to such risks. So hugely important topic, and very excited to see CDP's pioneering work in this area and others who we've also heard from today. Back to you, Kate.
Kathleen. We couldn't do it without you, of course. Finally, to you, Amit, the last comment of the day before I wrap up. What do you think are the most pivotal actions a financial institution can take now to increase water security, not only for themselves, but for all of humanity?
Thanks, Kate. I think it is important that we ensure that this discussion is front and center in boardroom conversations, and hence it is very important that we start with the governance layer itself. Very important for boards of financial institutions to be very actively engaged in this discussion, starting with strategy, charting out goals, monitoring commitments, and ensuring the right messaging across the ecosystem. To give you an example, at Axis Bank, we have a dedicated board-level committee for ESG governance and monitors ESG indicators and progress on commitments. The next step would be to include water security as a part of this agenda. The second element is also around capacity building, is another key area I think that institutions need to review as part of their focus. There is a paucity of professionals and subject matter experts within the ecosystem, leave alone banks. But as the momentum builds and we see increasing traction, institutions will have to invest in building capacity to meet the challenges across the life cycle, whether it is policy making, implementation, due diligence, or the operational aspects. As far as benefits of solving the water crisis, specifically for the banking system in India and Axis Bank, let me give you some published statistics which will really underline the importance for the financial sector. Around 40% of the portfolio of Indian banks is exposed to sectors that face high levels of operational water risk. 21 major Indian cities, including Delhi, Mumbai, Bangalore, and Hyderabad, are expected to run out of groundwater supplies by 2030, impacting close to 100 million people. In India, agriculture remains the backbone of the economy, and 90% of total water consumption in India comes from the agricultural sector. So just gives you that these numbers will always ensure it is an important problem to solve for both for the government and institutions. We already see some active public-private partnerships in waste management, prominent one being the Namami Ganga project, which is basically the cleaning and the restoration of the largest river in the country. The Ganges Basin covers a quarter of India's land mass, and provides 1/3 of India's surface water. The objective is, of course, to ensure that it facilitates investments in the sector, fast tracking of projects, ensures effective utilizations, and all of this with active public participation. A combination of short to medium term innovative financing arrangements, municipal, local area government development bonds, blending grants with repayable finance from development financial institutions, and finally, I guess, leading to blue bonds. Similar to the increasing popularity that we see in green bonds, incidentally, Axis Bank recently raised $600 million through green bonds, the first such sustainable bond issuance by an Indian bank. There is a case for blue bonds to raise capital to finance freshwater, marine, ocean-based projects. So in summary, this will really provide a large opportunity for institutions like Axis Bank, to participate actively in increasing water security. And clearly the work that CDP is doing around this will add as very vital inputs in ensuring that the right assessment happens on water risks.
Thank you, Amit. It's a really great way to end our session, looking at the opposite to risk, of course, which is the opportunity that all of this presents to us if we choose to seize it. As you will have heard, and hopefully will take away with you this afternoon, the finance sector holds the capital and therefore the power to drive the change that we need to see. Without them, we will inevitably fail. They decide to put their capital in areas where we need them to, and also in areas where we don't need them to anymore. And so it's exciting to be at the head of this new initiative that CDP is launching. Increasing transparency and disclosure on water from financial institutions will mean that the sector is held to account, and that the influence that they therefore have on our ability to succeed is strengthened. As you've already heard from Jordan, that data will be publicly available. So look out for it, get your hands on it, and help us play the accountability role that we need to play. And finally, I want to call on financial institutions that are watching today and that we're engaging with over the next year to use the opportunity of disclosure when we're providing it to you next year in order to seize the understanding that you need to manage this risk and grasp the opportunities that lay ahead for you as you guide through on your water journey. So thank you both and everybody on the panel so much for joining us today. You've really made a big impact here at COP26, and I look forward to continuing working with everybody. Thanks all. Bye.
Thank you.
Thank you. Bye.